All right, here's a sim on reg topics, many of which are specific to 2021, or some of these began in 2021 and are going forward. So either way, they're hot topics, the exam could ask you about it, and the last 3 or 4 points that you need to pass reg will likely come from this sim. So answer true or false to the items below numbered 1 to 27, which we'll do in 2 separate videos. And they'll probably ask you these questions in multiple choice, maybe not in sim, but who cares? If you learn the content and understand it and feel good about it, then you can recognize it, attack it, and move on. What I call the RAM method. Recognize, attack, and move on. That's the I-75 way. Number 1, Gordon purchases and places into service non-residential real property in 2021. So what is that? Non-residential real property. That's a commercial building, a shopping center, a medical office building maybe. Gordon can depreciate the building over 15 years. True or false? That's false. That did not change in 2021. Non-residential real estate is still depreciated over 39 years, straight line, not 15 years. Number 2, in 2021, Gordon improves the interior of non-residential real property that he had purchased and placed into service a few years earlier. All right, what's different about this one? In this one, he's improving the interior of the commercial building. He's not buying it and placing it into service. In question 1, right, he bought it, he placed it into service. We said that's depreciated over 39 years. But here he's improving. He's fixing up the interior of the non-residential real estate, and he had purchased it and he had placed it into service, it says, a few years earlier. Now it says Gordon can depreciate the improvements made in 2021 over 15 years. And the answer is true. Improvements to the interior of non-residential real property, the inside, after the building has been placed in service already. Those improvements, the cost of them, are recovered over a 15-year period using straight line half-year convention, and these improvements are known as qualified improvement property. And notice this is non-residential real estate. Number 3, in 2021, Gordon improves the interior of non-residential real property that he had purchased and placed into service a few years earlier. So far a lot like number 2. These improvements are eligible for 100% bonus depreciation, or Gordon can depreciate the improvements over 15 years. True or false? And that's true. Qualified improvement property, which is improvements made to non-residential real property, commercial property, interior improvements, are eligible for 100% bonus depreciation, unless the taxpayer elects not to use bonus depreciation and instead would recover the improvement cost over a 15-year recovery period using straight line half-year convention we said in number 2, because this is qualified improvement property. So if they ask you about qualified improvement property, QIP sometimes known for short, you let them know that it's eligible for 100% bonus depreciation. You can get the entire deduction in year 1, the year you made the improvements, unless you want to spread that deduction out over the many years of life and be able to deduct something against the rent revenue every year. Then you can use the straight line over 15 years. But it is eligible for 100% bonus depreciation, and that's where I think they might test you. This will not only apply to 2021, it'll apply going forward also. All right, number 5 has to do with charity. And yes, charity has changed quite a bit for 2021 to try to help with the COVID relief, to encourage people to make charitable contributions that otherwise might not do it. There are some rules that apply to this year. So number 5, Garrett is single and does not itemize. Remember, charitable contributions is really for those who itemize, right? He earned $52,000 and made a $400 cash charitable contribution in 2021. He gets no deduction for the charitable contribution since he does not itemize. True or false? And that's false. Garrett can deduct $300, that's the limit, for a charitable contribution made by a single taxpayer who does not itemize. So because he doesn't itemize, normally he wouldn't get any deduction. He would just take the standard deduction. But in 2021, someone who is single can deduct up to $300 for a charitable contribution made. And of course, that's for a cash charitable contribution. And the cash contribution would have to be made to a recognized charity, not to a needy person or a needy family. Unfortunately, you can't get any deduction for giving to a needy person or needy family, even in 2021, because it would be too hard for the IRS to determine whether you actually gave the money to the family or not. Number 6, Garrett and Terry are married filing jointly. Their AGI is $75,000 for 2021. They claim the standard deduction and they make an $800 cash charitable contribution to a qualified organization. They can deduct $600 in 2021. True or false? Well, they gave $800, but they can only deduct $600. Why? Because that's the limit for married filing jointly. $600 for charitable contributions if you're married joint and you don't itemize. So the answer to 6 is true. They can deduct $600, not $800 in 2021. All right, number 11 has to do with forgiveness of debt, which is usually income on the 1040. But what if you're forgiven from the debt on your home mortgage? Is there an exclusion for that? And there is. So let's look at number 11. In 2021, Kurt lost his business due to COVID and as a result defaulted on his home mortgage. The mortgage company forgave $300,000 of principal and interest on his primary residence. Kurt would need to declare $50,000 of the $300,000 as income on his 1040. True or false? And the answer is false, because up to $750,000 of debt forgiveness on a principal residence can be excluded from income beginning in 2021. This is actually reduced from $2 million in previous years. So this forgiveness of debt regarding a home mortgage on your primary residence, this has been around. In 2021, the limits have actually been reduced. So it used to be $2 million of that mortgage, up to that much is forgiven. Now it's up to $750,000. So as of 2021 and going forward, if you're forgiven on debt regarding your primary residence because you had a mortgage on it and the mortgage company forgave the debt, that is excluded from income up to $750,000. It's got to be your primary residence though. Number 12, Kurt lost his business during COVID and as a result defaulted on the mortgage on his vacation home, not his primary residence. The mortgage company forgave $160,000 of principal and interest on the vacation home. This amount will be subject to taxation in 2021, even though it's below $750,000. True or false? And that's true. Up to $750,000 of debt forgiveness on a principal residence, not a vacation home, can be excluded from income beginning in 2021. What's the exclusion for debt forgiveness on vacation homes? 0. There's no exclusion for debt forgiveness on homes other than your primary residence. And for numbers 15 to 27, go to the I-75 course, click on the next video in the final review chapter.